Hi everyone, it's Andrew here. So today I'm going to go through a demo of how Nick Sleep would practically think about price versus value. This was a great discovery for me. Maybe this is what everyone else does and I'm late to the party. Anyway, I thought this was so simple and so smart, and let me go through it with you now. So I think it's easiest to explain this with an example first. So let's say you have 700 Alibaba shares, which is not true by the way. I bought these at $190. So I've invested 700 times 190 equals 133,000. So the question is, what do I have right now? The stock price is, let's say, $110 per share today. This is just an example. I think it's actually well less than that, but anyway, you get what I'm trying to do. 700 times 110 equals $77,000. Now, does that mean I have $77,000 and I've lost $56,000? Well, that seems logical because that's what I would get if I sold the shares today. And I think that is how most of us would think, but not Nick Sleep. See, the value isn't 77,000 or even 133,000. The value of the investment is whatever intrinsic value is right now, not what the market price is. Just because the stock market says it's $77,000 doesn't make it true. This is a very interesting way to approach an investment. Now, I'm not burying my head in the sand here. Of course, if I was to sell the stock today, I would only get $77,000. But that would be a terrible idea considering the intrinsic value of the business. Now, after revaluing this company multiple times, I think Alibaba has an intrinsic value of $300 per share. And why do I think that? Well, that's around what I think it is worth considering the cash flow the business generates, its balance sheet, its competitive advantages, and all the other little things that go into figuring out intrinsic value. Now, I know I might be wrong here, but I think I'm in the ballpark. So the 700 shares times $300 per share actually equals $210,000. And that is what the investment is worth today in my eyes. Not the market's eyes, but what I believe the company is worth. All right, let me do another one. Let's do Dropbox. Let's say I have 500 shares and I paid $20 for these. That's $10,000 I've invested. And then we look at the stock price right now and say it's $23 per share. So I have $11,500 worth in my portfolio. Now that doesn't mean that the value of my investment is $11,500, or far from it. I look at the intrinsic value per share in my eyes. I want to be really conservative and not trick myself here. I mean, I could say that the intrinsic value should be $500 per share, but that's obviously not true. But if I do the numbers and I'm confident with my numbers and I'm conservative, I think Dropbox has an intrinsic value right now of $40 a share. So I think my 500 shares are actually worth $20,000, which is far from the $11,500 they are worth today. And even though these shares are higher on the market than I paid, I still need to think of them as not even close to what they're really worth. So when I look at my Alibaba and Dropbox shares from these examples, I see that I have an investment in Alibaba worth $210,000 and Dropbox worth $20,000, rather than the $77,000 and $11,500 that the stock market today tells me. Now, this strategy has really started to help me when everything feels like it is going down and you keep thinking that you're losing money. Well, if I look at the $210,000 and the $20,000, these numbers aren't changing every day. Actually, they probably only change just a little each year, maybe up or down 20%, say, as a maximum. But the stock price of Alibaba, for example, has gone from $300 to even under $100 at some stages in about 1 year, which is quite extreme. But the intrinsic value hasn't changed anywhere near that much. Now, I do have to be honest, it has changed a bit to the negative. The government rules and regulations are going to put clamps on the business, but it hasn't changed by 70%. So Buffett calls this the bipolar nature of Mr. Market. The prices that we get offered each day doesn't necessarily reflect the intrinsic value of the investment we made. If you don't like the prices the market is offering, well, you just don't have to sell. You have a choice. You can buy something, you can sell something, but the third one is you can just hold something. And with Alibaba, I'm comfortable valuing it at $300 a share. So I have no reason to accept $110 or $80. And I think my investment is actually worth $210,000. Plus, I think the intrinsic value in the next few years will be higher and higher. So it's $300 now, but hopefully it's $330, then $360, then $400 a share. Now, this strategy also helps when things might get a bit over the top. So let's say Dropbox stock over the next 3 years goes to $100 a share. but the intrinsic value has really only increased to $60 a share. Well, instead of looking at the $50,000 in my portfolio, I really should calm down and know it's probably just $30,000. And this is how focusing on the value of the business is a far better psychological state to be in rather than focusing on the price. Now, the only weakness in this entire idea is that it assumes you have got the intrinsic value under control, and that isn't easy, of course. So my suggestion is to just be really conservative. Use mathematics and invest in businesses that you think are super high quality. This way, if you calculate wrong, well, the business is probably still going in the right direction and you should be all right. Now, if you are new to investing, I use Interactive Brokers as my broker of choice. It is, in my opinion, the safest brokerage business in the market, and you can take a look at a demo account by clicking on the link in the description. And while you're down there, I also have a link to my e-magazine, which I write each month and includes my watch list of stocks and the intrinsic values of each of them. I keep that updated as best I can. Now, I hope you take a look at the overall value of your portfolio based on the intrinsic value of the company rather than just the current stock price. I think you will be really surprised at what you're actually holding. Now, a big thanks to Just One, a subscriber here on the channel. We've had a really good discussion about Etsy, and I'm glad you brought up their growth rates. I'm glad you're here on the channel. You are a legend. And thanks to everyone for staying to the end of this video. I will see you next time.